Mr. Arun Shukla as well. He's the President and Director at Lakshmi Cement. And let me begin by extending our season's greetings from ET now, Mr. Shukla. Hope you have a happy new year as well. But do you think it's going to be a happy year for cement companies as well? Because the report suggests price declines really continue for the cement pack. There hasn't been much improvement in demand, at least for the last few weeks and months. Is there something else that you are listening in, or is the ground reality different, Arun?
Thank you. Thank you so much. Good morning and Happy New Year to you as well in advance. Yeah, this quarter, I think October demand was good for cement. November was not that great because of festivity. December, latter part of December demand is good. But yes, I think you're right. Prices have gone down in the month of December. October, it was good. November was stable, but December prices have gone down a little bit. So overall, I think this quarter is still going to be better than last quarter. If you take, last quarter, price level and this quarter price level is going to be little higher in terms of, a net price. And of course, because of the cost softening up on fuel front, things are going to be little better than last quarter. So yes, it's going to be, reasonably good. Happy New Year for cement industry.
I just wanted to scratch that point further. Analysts say that the prices have declined almost 2 to 3% on a month-on-month basis, though even quarter-on-quarter, it's still higher by 2 to 3%. Are those
Little
numbers
better.
right? Because directionally what you said made sense, but are these numbers right?
Yeah. Yeah, I think, overall basis, quarter to quarter basis, yes, there has been some improvement on prices front. Yeah, December was down by 2-3%.
Morning. I just wanted to understand what the outlook is, in terms of demand momentum ahead of the general elections and what it is that you're expecting. Do you think that we will see a smart leg up?
Yeah, demand-wise, things are going to be good because typically, if you see cement, which is, some kind of, cyclicity involved, January to June is going to be good. That is what I believe. And once monsoon sets in, then demand would go down. So I feel that next 2 quarters, last quarter of this year and first quarter of next year, demand-wise things are going to be good, despite a general election somewhere around maybe around second quarter of next year.
So are you then sticking to the volume growth guidance of 12 to 15%, or do you think that you will do better than that? Because if I have it right, you started the year with a close to 20% volume growth guidance, which you trimmed down. Will you maintain 12 to 15%, or you're looking at improving it?
So I think demand is going to be around a double digit for sure, 12 to 15%. That is what I believe. So that is what I still maintain, that demand is going to be around that. And since last second half is good demand wise, so I suppose that we are going to be doing better than industry growth.
So when you're saying that the demand is good, does it mean that at least as we head into 2024, the pricing power will come back? And I ask you that because I'm trying to understand, when will you hit that target EBITDA per ton of 1,000 rupees?
Yeah, so as I told you in previous conversation also, our journey towards this 1,000 rupees EBITDA is on, and we have progressed very well in terms of the efficiency which we have brought in our supply chain and in manufacturing. We have done quite a bit on top line front also, in terms of different mix which gives a better margin to us. So progress is good, and if you really look at the bridging up which we have done in the maybe last, I would say 5-6 quarters with respect to the leaders in terms of margin, I think has been quite good. I'm happy the way we are progressing, because the gap between leaders in the industry in terms of margin and JK Lakshmi margin has gone down quite substantially. And I believe that the way we are progressing on different levers which we have been acting upon, we are going to reach that 1,000 rupees anchor EBITDA very soon.
Very soon. You're not sort of pinpointing a target. So would that be Q2, Q3 in the next 18 to 24 months? If you could just give us some sort of a clarity on that timeline.
So I think next maybe 2 to 3 quarter, I think we'll hit that number.
Okay. What about your consolidated capex? 1,200 crores, I believe, slated out for FY24, 600 crores for FY25. What exactly will this be utilized towards?
Yeah, so as you know that we have already commissioned our 1.5 million ton clinkerization unit at Udaipur, one of our subsidiaries, Udaipur Cement Works Limited. So that capex was involved towards that. We are going to commission 2.5 million ton cement capacity around March 2024, which is last quarter of this year financial year. So I think major capex goes towards that, and apart from that. We have been doing quite a bit on renewable energy front. So just to let you know that one of our integrated unit in Chhattisgarh, we have obtained about 80%, more than 80% of renewable energy. So I think capexes are being devoted towards capacity enhancement, and also some of the efficiency improvement in terms of renewable energy, WHR, and some of the operating capexes.
Hmm, that's good to know. But I also wanted to understand from you, analysts are talking about how JK Lakshmi Cement is a structural story. You talked about the kind of improvement that you're doing, the narrowing of the gaps on the EBITDA per ton as well. But what do you think the next 3 to 5 years will mean for the company? What are the strategic priorities you have set for yourself? Anything that you can talk to us about in terms of the roadmap for next 3 to 5 years?
Yeah, so we are planning to reach to 30 million ton by 2030, and we are well on track. We have already started, enhancing our capacity at Surat grinding station. So we are going to add another 1.35 million ton over and above 2.5 million ton, which we are adding up at Udaipur, right? We have already, as you know, that we have obtained mining lease license at Nagaur in Rajasthan and Kutch in Gujarat. So there also we have started our job. So our plan is to go to 30 million ton by 2030. Even I believe that we'll be able to achieve even before. We are also we have planned to kind of explore possibility of expanding our capacity in East, because whatever capacity we have in East, we have already kind of utilized. So that is also there in the offing. So maybe in coming months, I think we'll just see if at all we can start second line at Durg as well. So we do have a plan of going to 30 million ton. Apart from that, our major focus is on renewable energy. We are at about 40% of renewable energy as of today. Our plan is to take it to 80% plus in coming years. We also have a plan to go very aggressively on alternate fuel, which is non-fossil fuel, because climate change is a big topic nowadays, and we are very conscious about it. As a corporate citizen, we have a plan to go to carbon neutrality by 2047. So for that, we have already prepared our roadmap. So I think these are the priority area: growth, reaching to 30 million ton, working on renewable energy, non-fossil fuel uses, and of course, efficiency improvement to go to 1,000 rupees EBITDA. So this is what the priorities which we are working on.
And yes, sustainability is not only a big talking point but a big need as well. So kudos to your efforts there. But there are analysts who are expecting realization improvement by 50 to 100 rupees per ton on a quarter-on-quarter basis in Q3. Is that a realistic estimate, you believe?
I think that is a realistic estimate. Yeah.
Okay, good to know that. And as an industry expert, Mr. Shukla, what's your take on the consolidation in the sector? Do you think the bulk of it is already behind, or this is something that will continue as a trend in 2024 as well, the consolidation of the smaller regional players into, of course, the bigger entities?
If you really look at the level of consolidation, that has not changed much, right? So if you really look at with some kind of analysis, so top 4 or 5 players have been controlling about sizable chunk even 4 or 5 years back. That has not changed much, right? And going forward, I think this dynamics is not going to change much, because whatever was to happen, that has already happened, and I don't think that further consolidation is going to happen, because at least in my visibility, I don't see things so. Yes, of course, I think cement industry is quite buoyant about enhancing capacity, increasing capacity. So that will go on. I think the kind of growth projections cement industry has, because I see that 8% CAGR. That is what the growth estimation we have. That is a good robust growth, I believe. And my sense is that people are going to focus on brownfield and greenfield expansion than going for consolidation. This is what my take is.
Okay, point taken. Thank you so much for highlighting for us your growth targets and giving us a sense as to what the year ahead could look like for JK Lakshmi Cement. Here's wishing you a fabulous new year ahead.
Thank you so much. Happy New Year, everyone. Thank you so much.